Hi everyone and welcome to this conversation with Mr. PVK Mohan. I have Mr. PVK Mohan, Head of Equities, Principal Mutual Fund with us. And today we are going to do a conversation around his thoughts on the Principal Small Cap Fund for which we are running the new fund right now. So welcome Mohan, in this conversation. Mohan, the first question is the market is at a lifetime high today. And so, in that context, where do you see the opportunities to invest?
I think, Gaurav, if you just step back to the calendar year 2018, you'd see that the Nifty was up about 3%. But much of the gain of the Nifty itself was contributed by a handful of large cap stocks.
Correct.
So, if you move outside, say about 7-8 stocks, the returns are actually negative. And if you look at the small cap index, it's probably down around 28% for the year. So, this is a very stark underperformance, the likes of which we have not seen for well over a decade.
Okay.
So I think as we head into 2019, I would think that the markets over the course of the year would get much more broad-based, which means the performance would be much more diverse, more sectors, more stocks participating in the market rally. And I would also think that good mid-cap and small-cap stocks with good fundamentals would probably do much better. And
Okay.
in some sense, catch up with some of the stark underperformance that we've seen in the last year.
Okay. So, in that context, you are recommending in terms of small caps as an investment opportunity which has been there. So, but can you just elaborate? Why do you believe that small cap is a good investment opportunity at this point of time?
Yeah, I think if we go back, India, I think at all points of time always offers good bottom-up stock picking opportunities. These are stocks, probably maybe small cap in by market cap, but in terms of size and scale of operations, they're pretty large.
Okay.
And if you go by today's definition of SEBI outside the 250th company,
Correct.
you'd find that the 250th company is probably just shy of 9,000 crores. By no means small. So I
Correct.
think the first thing, the notion that small cap means absolutely small companies in terms of size and scale, that's a myth.
Okay.
I think we've seen large number of companies, and these are the other beauty is these are companies which are fairly dominant in the relative sectors. So when we're saying small cap, you tend to think of a company with a small meager presence in the sector. But no, the reality is there are a lot of businesses which are leaders in their respective sectors. So I think that's one of the beauties of the charms of investing in a small cap company. And the list of listed companies continues to grow.
Okay.
And I think even if you look at the top 500 companies beyond the 250th company, I think there's a fairly diverse set of opportunities that exist. And I think if I may categorize, so these could be companies which are in businesses which can be only played by investing in small caps, or these could be companies which are part of large organized sectors but could be very dominant regional players. So we have both kinds of opportunities. So I think in that sense, there's a host of opportunities, and it really is up to the fund manager and the stock skills which finally would yield results over a period of time.
That's a very interesting insight, Mohan, because you are talking about some specific opportunities in the sectors which can be explored further, much more in small caps. So, can you just elaborate with some more example on this?
So I think if I talk in terms of sectors, the first category of opportunities that I mentioned, that companies in sectors which can be played predominantly through small cap stocks.
Okay.
Some of the obvious names that come to my mind. Let's take on the services side something like hotels. Most of the hotel stocks listed are predominantly, barring one or two on the mid cap, most of them are in the small cap space.
Okay.
If you take construction, for example, the companies which are the EPC companies, which means they do simply the construction part of the business.
Okay.
They are predominantly small cap companies.
Okay.
They are very large in terms of size, but by virtue of by definition of market cap, they fall in the small cap units. if you take chemicals as a sector,
Mm-hmm.
not only the traditional chemicals but also the specialty chemical, a host of them they are in the small caps space.
Interesting.
If you go to the power T&D side,
Yeah.
I said the largest two players, or at least in the top five companies, most of them you would see are in the small cap space.
Okay.
So that is as far as the companies which can be best played by investing into this. The beauty about some of these companies are focused on their relative sectors.
Mhm.
Unlike, there is an opportunity to play this sector through the bigger companies, but then it's a small part of their business.
Okay.
So you don't get that focus that as a fund manager, what we want is a company focused on a certain line of business, which is best available through the small cap companies. The other thing, as I said earlier, was companies which are fairly dominant, maybe regional players. A classic example is that of a cement. Let's say a large company in South India with a very dominant presence in South India.
Yeah.
It could be small in terms of market cap, but in terms of their area of operation, it's fairly large.
Okay.
So I think these are the kinds of opportunities we seek to invest in.
This is a very interesting insight, Mohan. So I think while these are the opportunities which are there, but one of the question which comes is these are normally under research, and there is not too much of research which is available. So how do you what's your portfolio construction strategy? How do you research about these companies, and if you can elaborate on that?
Yeah, I think so. First is our investment team. We are a team of 7 people with over 100 years of cumulative experience.
Okay.
So I think the experience is important because it gives you perspectives on the cycles of businesses and how to better understand them and analyze them. So that's important. We believe that India, not only India, offers great amount of small cap opportunities, but we also believe that the core of sustainable good performance comes from good stock selection.
Mm-hmm.
So the bedrock of our investment hypothesis, if you can select good stocks which are growing faster than market expectations, these are run by good managements in good businesses, I think over a period of time, chances are that they could give reasonably good returns. So our whole research process actually focuses on identifying these things. We do have a view on the economy and sectors, but as I said, the portfolio construction tends to be more bottom up. It's not that we wouldn't have a view on the economy and sectors. We do have that. So the source of ideas, if I may start with that, is really it could be some development at a company level.
Mm-hmm.
At times it could be something that's happening at a sector level.
Okay.
It could be. So that serves as a starting point. Besides our research team, we also have a proprietary tool called the GRP,
Okay.
which is, I think over 100 of the small cap stocks are in that universe. And now that's a proprietary tool which ranks stocks based on about 14 different.
14 different parameters. Okay.
Some of them are fundamental, some of them could be technical. But that's a very good starting point for the analyst in terms of deciding where to focus their research efforts.
Okay.
So combination of what's happening in the economy, what's happening in sectors, what's happening in companies with a tool that aids you, that sets us going. So when we go and meet companies, what we try to do is really understand the underlying businesses, the drivers of that business,
Okay.
interact with the management, and try to see, they've been there over a period of time, so that if their actions are consistent, whether their delivery has been good, whether they're fair to minority shareholders. So once we get that, we always try and quantify, what could be the earnings potential of this business based on.
As part of your research process. Okay.
So that's an important thing because finally, when you invest, you must know what you can make of that.
Okay.
If assuming the developments in the company and the sector pan out as per expectation. So based on our interaction with the management, based on what we read, and not only do we meet the target companies, but also various stakeholders. It could be suppliers, it could be distributors, it could be competitors, all of them, and then form a holistic view of what could be the earnings potential of the underlying company, convert into numbers, and therefore try and quantify the potential returns. So it's our belief that when you buy small caps, you need to buy them when the risk reward profile is very attractive. So talking in terms of numbers, hard nosed numbers, often is a good thing. Our research process actually doesn't stop. That's the start of the research process.
Oh, interesting.
So we actually emphasize a lot on very periodic follow-ups to make sure our investment hypotheses are on track. And wherever required, we recalibrate our numbers if you think so that's called for, so that we set our expectations, recalibrate them to the reality. So that's something that we do. So we keep following that, and as the story pans out, we're quite happy. So a typical horizon period, I'd say, is 2 to 3 years.
Okay.
That's our area of forecast, and that's our area of monitoring that we keep doing. So it's an ongoing research process which I think focuses on identifying. We are happy to, because there's, as you rightly said, there's very little research in this space. So we are happy, by virtue of our rich experience team, we are happy to do our own research. So research under research companies, we are happy to own under own companies. But as long as we understand the underlying business, as long as we can quantify the potential financial, and as long as we can identify what we think over a 2 3 year period we can make from that.
I think that's an interesting insight, Mohan, in terms of the research process. But one of the aspects which is also with a small cap investing comes in terms of perceived higher risk, and so it's very important to understand that, okay, how do you, from a risk management perspective, how do you see what are the tools which are being there, and from a portfolio perspective, if you can share some thoughts on it.
So I would broadly divide these risks into 3 4 different types of risks. So I think the first is a selection risk, which means, are we investing in the right companies?
Correct.
Now that requires very dedicated, detailed research. So a large part of that process is, doing your background research on the potential companies, whether you like the underlying business, whether you like the underlying company, whether they have an articulated growth plan, whether in the past they've executed well, and therefore, as I said some time back, if you can convert this into hard-nosed numbers of how the company is likely to do over the next 2 3 years, if you believe that the current valuations compared to peers, compared to the market, and compared to the company's own past track, are the valuations attractive? So I think it's very important to re-emphasize this numbers, earnings forecast, because I think we make most of the assumptions on critical parameters in-house, and that's what we keep monitoring.
Okay.
So that's where you could say, some kind of a proprietary knowledge or understanding which is at work, which over a period of time must translate into better returns. So that's what we try to do. So the selection risk, getting the call on the underlying sector and the company, is extremely important. Now, because we typically deal with either niche or players who are dominant in their respective sectors, we look for managements who've been around for some time, where there's a depth of management. It's not a single person driven kind of thing. So there's a depth of management, there's a scale and size of operations, there's a history of track record of delivery, and of being focused on shareholder returns. So once you do that, I think it minimizes the execution risk. Execution risk is inherent to any company, big or small, but what we can do is to try and keep it under control by focusing on these type of companies. I think at the third level is at the portfolio. Now, what we would do there is really spread out our investments across several stocks, and probably make, typically we wouldn't go beyond 5% in a single stock exposure.
Actually, not. While the regulatory limit is much higher, but as a
I think it's a much more prudent strategy.
Okay.
We are not out here to maximize return, but give reasonable returns, and with calibrated risk taking. So that's why I do that. And I think finally, manage the liquidity risk. We would preferably ensure that a large part of our portfolio passes our liquidity screen.
Okay.
So once you manage this, the idea is you need to manage this and ensure that these are within the defined parameters. I think risk is automatically in some sense controlled, and fully the potential returns are well worth this risk.
Yeah, Mohan, I think those are very good insight for us. We have now a better clarity in terms of what is the kind of opportunity in a small cap, how you will utilize that, you will see the portfolio constriction, and then what are the risk management perspectives. But I think the most another question which I wanted to ask you personally is your personal conviction very high to invest your own money and invest in principal small cap fund?
Oh, absolutely, I will.
Okay, sure. So I think here is a fund manager and chef eating out of his own kitchen. Thank you, Mohan. I think it was a very insightful, uh, insightful to us. Also, I would like to share with all our distributors, partners, and investors. There are two facilities which are available in this fund. One is the STEP facility. In this STEP facility, customers can invest in 4 equal installment and can come into this fund. And also we have trigger option. In the trigger option, the customers can choose the target rate of return, and once the target rate of return is achieved, the appreciated amount moves to the fund which the customer has selected. So with this, thank you so much, Mohan, for this conversation.
My pleasure.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.